Hey guys, it's Nick, and in this video, I want to talk about the craziness that's going on with the whole Bill Ackman Pershing Square Capital SPAC. A lot of people seem to be losing a lot of money on it, so I'm going to dive into that and see what's going on. And surprisingly, the people at fault here are probably not who you think they are. So let's start off with a little bit of background. If you don't know who Bill Ackman is, he started Pershing Square Capital, a hedge fund, back in 2004. And he's kind of like a celebrity hedge fund manager. He's always in the news. He's always on CNBC. His face is always out there. So he has been known to have a few public investments, some that went okay, some that didn't go so well. In 2010, he bought 18% of JCPenney around $22 a share and ended up selling it somewhere around $13 a share. Around 2016, he lost a few $1 billion on Valeant Pharmaceuticals, that company that really blew up really quickly, went down a lot. So he lost a lot of money on that as well. A few years back, Bill Ackman was shorting Herbalife and said that they're kind of a pyramid scheme. And Carl Icahn actually took the other side of the trade and the stock went up and Bill Ackman lost a lot of money. And Bill Ackman actually spent about $50 million on a public relations campaign to kind of talk down Herbalife stock. So he actually put money into talking this thing down to help his short position. But to me, the best indication of what kind of person Bill Ackman is as a money manager is what he did right around during the shutdown. And I'm not just picking on him. Most people in the hedge fund business are like this. They will sell out everybody if they can make a few extra dollars. So always keep that in mind, that when they're out giving information to the public, they're doing it not to help the public, but to help themselves make more money. So I actually did a video about this a year ago. Before the shutdown happened, he shorted $26 million in credit spreads and made about $2.6 billion, but not before he went on these shows like CNBC and was urging the president to shut down the whole country for 30 days, saying that hell is coming. All of this while he was short. And not even a week later, he covered his short and got long some of the same companies he was saying could go to zero, like Hilton, and then came out and said that he is now very bullish. So he will say whatever it takes to make a whole lot of money for himself and his investors. That said, I don't really blame him for what happened with this SPAC. So this article is about how millennials lost millions on Bill Ackman's SPAC implosion. And from the title, you would think that the SPAC fell like 90% or something like that, but that's not actually the case. Now, for those that don't know what a SPAC is, I've done a video on it explaining it really simply. And what it is basically investors investing money in a stock of a company that has nothing but cash that's looking to buy a business. So you're basically a box with a bunch of money in it, and you're hoping that the manager goes and finds a good company to buy within a certain time frame. And if he doesn't, then the money gets returned. And there's a few other details, but that's basically it. You're putting your money up in the hopes that the manager of this SPAC is going to find this great company and you guys are going to make a lot of money. So to me, it seems that's the first mistake. If you're putting up a lot of money in something like this that you don't even know what company Bill Ackman is going to buy with your money, that's mistake number one. So let's look at some of the claims of the people who lost money here. Like this guy, a 35-year-old unmarried Chicago psychiatrist who lost nearly $1 million investing in call options on the pre-merger entity, meaning he bought call options before they even announced that they found a company to buy. So basically just speculating. So this SPAC, PSTH, was touted by Ackman to be investor friendly, and Ackman even tweeted a rap video about SPACs minting money in February 2021. And Ackman even joked about marrying a unicorn when talking about his SPAC's launch last July. Let's go see that rap video that he was talking about. So here's Bill Ackman's Twitter, February 8th, and he put this video here by this rapper Cassius Cuvi, SPAC Dream. Now, I don't want to play it for copyright, but it's a guy rapping about how great SPACs are and that kind of stuff. That's fine if the guy wants to rap about it, but if you're Bill Ackman, that has the biggest SPAC in history, something like $4 billion, I don't think you would want to be putting this on your Twitter feed because it can be misconstrued that you're kind of pumping it up, so to speak. So, I mean, that's mistake number two. If you're buying this SPAC because Bill Ackman is posting some rap video about a SPAC, and you say that the video literally single-handedly caused the stock to rise 10%, the investor told II. It was like, okay, this is coming very soon. If you don't get in now, you're going to miss it. Now, here's where I have to put all the blame on the actual investor and very little on Bill Ackman in this case, even though I would not trust Bill Ackman to give me good investment advice, especially if I'm not his client. But here, this guy who lost his money said, whatever money I had, I pretty much was putting it all into buying more of it, he said. Of his purchases June 18th, 2021, $25 strike call options. The stock traded at 23 at the time, leaving the options to be a total loss. So let's take a look at that, June 18th. So the stock traded at its high around $33 in February, coincidentally right around the time when he posted that rap video. And this guy was buying calls all along the way. It says in another article, but he loaded up here at around $23. When the stock was $23, he was buying $25 out of the money calls. And so the stock is now $20. So he is crying about a stock going from $23 to $20, and he lost $1 million doing that. Whose fault is that? That is his own fault for buying out of the money, short-dated calls in the hopes that something was going to happen, some news was going to happen and make the stock go back towards $30 or something like that. The fact that he lost $1 million from the stock moving from only $23 down to $20, that can happen to any stock. It could happen to Microsoft, Apple, whatever. It doesn't mean that there's fraud involved. It means that he did something really risky and really a real big gamble, a big speculation. So why did this psychiatrist and others on Reddit go all in with these out of the money, short dated calls? Well, because they thought something was going to happen soon and that Ackman's SPAC was going to merge with a unicorn like Stripe or Elon Musk's Starlink. And so Ackman didn't deny these rumors, and he even joked about marrying a unicorn when he launched his SPAC last July. But a deal was finally closed on June 4th, and it wasn't a unicorn like Stripe or Starlink. It was actually a 10% stake in an upcoming spinoff from Vivendi of Universal Music Group. But within a few weeks, the SEC stunned Ackman and investors, essentially killing the deal by telling his lawyers that it did not meet the New York Stock Exchange requirements for a SPAC. Long story short, the stock is sitting around $20. So this psychiatrist is now struggling to make quarterly tax payments to the IRS and $350,000 in student loans. And there are 16 others that an institutional investor interviewed for this article. One guy, a 31-year-old German college student, put his family's $300,000 in savings, most of it from his grandparents, into Ackman's SPAC, and he's down about 80,000 euros so far. And here's another guy that says, I looked up to Ackman, and he's studying finance while working part-time at Citigroup, and was hoping to use his Tontine winnings to pay his college tuition. Instead, he has to take on a second job after losing so much money trading the PSTH options. Adam was one of Ackman's biggest fans, helping start on Twitter what became known as the PSTH support group, which became self-acknowledged cult idolizing Ackman. Okay, that's probably your second problem right there, idolizing any guy that is out there to make as much money for his investors, not for you. The support group members admired Ackman's social conscience and obsessed over his handsome looks and silver hair while scanning his every word or tweet for clues about the eventual SPAC target. Yeah, if you're investing based on somebody's looks or their silver hair, you're probably doing something really wrong. These young investors were aware that there's a lot of froth or even fraud in the SPAC market, which has become a hunting ground for short sellers. But the Tontards, or Tontinites as they began to call themselves, were convinced that Ackman's SPAC was different. Oh boy. Now, as with anything that's hot for a minute in the stock market or in investing, everybody piles in and then it usually underperforms. And that's what's happened with SPACs, showing that most investors in SPACs have lost money over time, with a Renaissance Capital study last year showing a median loss of 29% between 2015 and September 2020 for companies' shares post-merger. Ackman's first SPAC with Burger King notably has defied the odds with a 19% annualized gain over almost a decade. And this story of this other guy who lost $1.6 million that he saved over 20 years as a software engineer and never invested in the stock market until 2020 because he did not trust the stock market. So what does he do? He invests his entire $1.6 million into the Ackman SPAC because his friends were talking it up. Ackman just sounded very confident. I trusted the guy. I thought he knew what he was doing, he says. Well, Ackman does know what he's doing. You may not know what you're doing. And so here's another mistake, or it's not a mistake, it's really greed. He says, at first, the software engineer bought common stock, but later, he says, like an amateur, he transferred shares into expensive in-the-money call options with a strike price of 22, well below the $30 where the stock was trading at the time. I thought it was safe, he says. And his account actually reached $2 million at one point, but he was expecting that it would reach $4 million. Instead, they expired worthless on July 16th, a few days before Ackman announced the SEC had torpedoed his plans. And this is the smartest thing this guy said right here. Everything is my fault, the software engineer says. It's not Bill's fault. And this is 100% true. Now here it says Ackman knew that retail investors already lost money buying call options on his SPAC, and they yelled about it on Reddit and Twitter every day. And so when Ackman reluctantly acknowledged at a Wall Street Journal event that he was in talks with a target company and that a deal might happen within weeks, he quickly warned against buying short-dated options. What we don't want people doing is speculating buying short-dated options on our SPAC, he said. Instead of calming investors down, they loaded up on weekly options. After all, such options are incredibly cheap, and if a deal is announced, the stock runs up, the return could be huge, perhaps a $100,000 win after spending $5,000 on several weeks' worth of weeklies, one investor explains. So what happens when a bunch of investors lose money on a stock? They sue, of course, and that's what's going on. Pershing shares SPAC sued days after report revealing some retail investors lost millions. The lawsuit seeks to prove that Pershing Square's SPAC was an investment company and not a SPAC, according to Bloomberg Tuesday morning. So basically, investors are going to lose even more money hiring lawyers who are going to get back a few pennies for them to make this whole thing go away. So the only person who doesn't lose money in any of this, of course, is Bill Ackman and Pershing Square Capital, as always. So guys, the big lesson here is never follow any celebrity hedge fund manager as some kind of guru or god that is out to help you, because he's not. But the biggest lesson is never bet the farm. I mean, this SPAC only fell from like $33 to like $20. So these guys lost millions of dollars just from really small moves. Now, had the guy with $1.6 million only put 5% of his money, say $80,000, into this SPAC, even if he bought at the very top at $33, and it went down to 20, he would have lost about 40% on that investment, which is like $32,000. He would have still had $1.57 million left. Now, of course, you don't get the thrill or the chance or the opportunity to make millions of dollars by doing that, but you also don't have the risk of blowing up your whole entire fortune. And so putting all your money in short dated out of the money calls in the hopes that some news is going to come out to make the stock jump 100% or something like that is just pure gambling. And these guys, they are going to learn a real tough lesson here, hopefully, and that they're not going to do something like this again. And hopefully they're young enough to build their fortune back up. And so learn from other people's mistakes. Don't repeat them yourself. I hope you like this video, and I'll see you in the next one. Thanks for watching, guys.